What we're going to talk about today is sort of where we are with the legislation that got passed right at the end of 2020. There's a lot of pieces that are in play already, and we are working on all kinds of things and getting lots of questions from clients about how to handle some things. So I actually wrote some notes this time because there's so much to cover. And let me just start at the beginning. The beginning being what everybody is most looking forward to and thinking about is that, do I qualify for a second round of PPP loans? So they did pass a second round that's available. It is open. It opened this week where they are starting to be funded by the SBA. And there are some qualifications this time around. And the main one being you have to prove that you have a drop in gross receipts from 2019 to 2020 in any one quarter. And so it's talking about gross receipts, which is the gross revenues you bring into your business, does not include any grants, any, PPP money that you might have received, anything that you received last year that was not money from selling your service or product is not part of that number. So they're looking for that drop. The other qualifications you need to have, if you got a previous draw, which if you're applying for a second draw, you got a first one, you had to have used that first draw as it was supposed to be. So you needed to be following those requirements of having at least 60% for payroll costs, the other 40% on qualified expenses of rent, utilities, those qualified expenses that were defined. And then you also have to have less than 300 employees. So my recommendation is, if you were happy with the situation with the first round, go to your current bank. Go to the bank that gave you the first round. It may be easier. If you had some issues or struggled, maybe your bank wasn't ready, check with them again anyway. So maybe you ended up going with somebody like a PayPal or a Cabbage or something online because your bank wasn't ready. Go to your bank because they may be ready now. Everything was coming in so fast and furious for that very first round back in April that the banks weren't actually able to get up to speed fast enough to get applications through before the money ran out. But they should be ready now. They've had months to get ready. Also relating to the gross receipts issue on that and proving that you were down 25%, there's been lots of discussion on what you need to prove. And so for those people who are seeking a second draw that is less than 150,000, you don't have to prove that you were down 25% in any quarter until you apply for forgiveness. However, there are banks that are looking for that information. So you need to do that calculation and to make sure that you qualify before you even go to your bank. So over on WLXco.com /videos, a couple weeks ago, I did a blog video on how to run the quarter over quarter report that shows your percentage decrease. And that is what I've been providing for any of my clients that are applying for that second round. And it only has to be one of those quarters. If you're down 25% for the entire year, then you don't necessarily have to show that by quarter, but my recommendation is you do, and you have that information ahead of time. If you're applying for a loan over $150,000, you need to give them that backup and that certification prior to them approving the loan. And so there's some clarification that came out just yesterday or the day before that discusses what you need to provide. And so they say, okay, if you have an audited financial statement, which most small businesses do not, just provide us those reports. Well, one, if you're using 2020, 2020 is not done. Nobody's got an audit done for 2020. But if you're using anything at a lower level than an audit, then essentially the client needs to provide the report. They're asking for a set of financial statements, which would be an income statement or profit and loss. I don't know that they're really requiring the balance sheet because it really doesn't relate to this. That shows the decrease for that quarter. And then they're requiring that the applicant essentially sign off on that. So your accountant is not signing off on that. That is you signing off on that, because that's not typically a standard report, and the accountants aren't taking responsibility for this report. We'll help you figure out how to make the report, but we're definitely not going to put a letter on top of it right now, especially. So, so that piece of it is, be prepared to prove that. The same rules apply for your eligibility. So you have, as far as what expenses are eligible to be used, 60% needs to be payroll, 40% can be other expenses, and they've expanded that. They've expanded that to include some PPE. They've expanded it to include some other operating expenses. However, my recommendation is that since they're giving you 24 weeks to use 2.5 months of payroll, just use it all for payroll. It makes the forgiveness much easier because there's less paperwork that you have to provide in order to get the forgiveness. You're just giving them the payroll reports for that time period. And so you're not spending a bunch of time coming up with, here's my lease, here's the copies of the checks that I cut, here, all those things. So just use it for payroll, and then it's going to be 100% forgiven. You have 8 to 24 weeks to use this same amount of money. And you're going to either use your 2019 payroll numbers or your 2020 payroll numbers or the last 12 months, which guess what, is 2020. And that payroll number is going to be the gross payroll, with some limitations on people that are getting paid over 100,000, with some limitations on owners. But then it's going to be that payroll number divided by 12 times 2.5. Same calculation. There is no caveats for, hey, I was closed for 3 months and didn't get to pay payroll. Can I exclude those months? No, it's a 12-month average. That's how they're coming up with your average monthly payroll. So most people who had to be shut down for 3 months in 2020 are going to go back and use their 2019 numbers. So it is definitely a 12-month average. So don't be trying to make it something more complicated than that. If you're using the same bank that you used before, they have a bunch of that information. The application process is pretty simple. You are providing them with, if you're using 2019 numbers, they already have all that, but you're going to fill in a couple of blanks. It wants to know what quarter you're choosing to compare 2019 to 2020, what your gross receipts are for 2019 and what your gross receipts are for 2020. So that's about the only additional information that has been put onto this application for the second draw of PPP. So let's see, what else? See if I got it covered, everything relating to the second draw. All right, so there's also the opportunity, if you weren't able to get into the first or technically second round of PPP, you can get your first draw. And this is going to follow the same rules as prior. It's 2.5 times your payroll, but it's going to let you use either 2019 or 2020. So maybe you're a sole proprietor and you had a loss in 2019, but a profit in 2020. Maybe that's a legit scenario. Depends on your industry. People who had a loss on their Schedule C were not able to get the PPP loan. But if you had a profit on your Schedule C, what they're wanting is for your tax preparer to go ahead and prepare your Schedule C. It doesn't have to be your whole 1040 filing, but that Schedule C needs to be ready. And that's the same thing that they had you do back last spring, was if your 2019 return wasn't ready, get that Schedule C ready. So they had that number that they could then calculate your average monthly payroll on. So for the new people, you have 8 to 24 weeks. You need to maintain the level of payroll. You need to be able to submit all of those things, so those things like proof of payroll and all the things. There's the original application was a lot more paperwork and proof than the second draw will be if you are staying with the same bank. So my recommendation there is to go try your local bank first. So go to your bank. If your bank is not doing it for some reason, then you're going to look elsewhere, and I would still look for another local bank. And I am a proponent for having a person in your town that you can actually talk to. Maybe it could be remote, but you need that person. And that means you're not dealing with the large corporations of, a PayPal, which is like an online type of service. You're not dealing with the people that are just, they don't necessarily know the rules. Your local bank, if they are administering a PPP plan, probably have figured out the rules by now or know how important it is and what they need to get you your loan and get you your forgiveness. So, along the lines of forgiveness, so you can apply for the second draw loan even if you haven't been forgiven yet, but you have to certify that you used the first round 100% for what it was supposed to be used for. So if you had any portion of that you're not expecting forgiveness for, then I am going to say you will not qualify for a second draw. The forgiveness applications, just today, oh goodness, actually it was yesterday. I checked this morning at the Treasury site, and all of the forgiveness applications have been updated. The 3508S, the 3508EZ, and the 3508. So, and the good news, the S is what we were waiting for, is that's the simple, and it has been bumped up to include loans of 150,000 or less. So that's the more minimal amount of paperwork that has to be done. And so what's great about this is that the application for forgiveness is easier. However, you still need to maintain your calculations. You may not have to show your calculations, but you need to make sure that your FTE calculations and anything relating to figuring out if you qualify for the forgiveness, that you maintain those records. And I'm going to tell you right now, maintain them indefinitely. We do not know when audits on this are going to start, if they're going to trickle down to loans that are $150,000 or less. We just don't know. And so it's better safe than sorry. Have some place that you are hanging on to those documents, but know that the application process just got easier. And one of the things that is removed from all of those applications is asking how much you got for the EIDG, which is the Economic Injury Disaster Grant. That was that $10,000 to $1,000 to $10,000 grant, depending on how many employees you had. That the original forgiveness applications were saying, okay, you can get forgiven for all of your PPP unless you got that grant. And then we're going to turn that amount of your PPP into a loan. So for some people, they were expecting to have a $10,000 loan after they got their forgiveness. You don't have to do that anymore. You don't have to include that. And this is why I had been telling my clients, hey, just hold off, just hold off, just hold off, because there was plenty of time to file for that forgiveness. And what I have seen is that some people filed for the forgiveness and they got forgiven, except for that grant that had to be subtracted from the forgiveness. They started making payments on that loan to their bank, and so now they have a loan with some payments against it that the bank owes all that money back to them at this point. So any payments they made, they should be forgiving that. So I would give it until about February 1st if you are in that camp where you got your forgiveness minus the EIDG. I would give it to February 1st, and then I'd reach out to your lender and say, hey, what are you going to do about this? I should have been forgiven for all of it. I need my documents updated to reflect that. I need any payments I made against it reimbursed to me. So there are so many pieces there that I'm glad the majority of my people waited. But if you didn't wait and you're in that camp of sitting there with some EIDG sitting as a loan, you wait till February and then reach out to your lender. And I say wait till February because then the rush of the PPP stuff, as far as getting that second round or getting an initial first round, will have died down, and they will have time to start going back to focusing on forgiveness and focusing on cleaning up those things that the legislation corrected late in December. Okay. What else do we have to talk about? We talked about the forgiveness forms being updated. So those can be found, and let's see if I can share my screen. And I'm going to move this over here and share screen. And I'm going to share this one. Okay. All right, so this is where I'm coming up with all of my latest data on these things is the U.S. Department of Treasury's website. It's you can see says home.treasury.gov, and then I'm clicking here on COVID-19 relief. Oh, I need to actually click on my monitor over here. Okay, and then choosing your assistance for small business. All right, when you scroll down, this is where they've been populating all of the updates, everything since the CARES Act began. And there's some guidance here on your second draw of PPP loans. And then if you get down here, they've combined the loan forgiveness application and the instructions now into one document. So this one is for the 3508S. And then we have a 3508EZ and a 3508. So if you have a loan under 150,000, start with the S. I don't see any reason to go anywhere else. If you're over 150,000, you're going to have some criteria that you need to meet to be on the EZ form. And if you don't meet that, then you're going to be on the 3508 regular. So this site right here is where I spend a lot of time getting my updates. And I'm just going to post this link into the comments here so that you have easy access to be able to get to that and get to the applications if you're filing that yourself. Down below, there's even more. There's all the frequently asked questions, the interim rules on everything. So everything that affected the Treasury, and there was really more of the CARES Act things that essentially didn't affect unemployment and didn't affect you individually, those are all here. Okay, so I'm going to stop sharing, come back to you. Okay, let's see. COVID pay. We've had many questions regarding this. So COVID's still a thing, and it's going to be around for a while. People are still getting diagnosed. People are still being exposed and having to be quarantined. Kids are still in virtual school. So that means, there are parents home with the kids. And the question has been, hey, do I still have to pay COVID pay? Do I still have to, am I required to? Well, the legislation essentially extended COVID pay to March 31st, but it's voluntary for the employer. So it's voluntary. However, if you choose to do it, you still get the same credit. It still isn't really costing you anything. You just need to be putting that into your payroll system properly. The person still gets paid, up to 2 weeks. So it's 80 hours for a full-time person. If they're quarantined or caring for a sick person in their household, might be 2/3 pay. I think Nicole would know this better than me. But the thing that has happened is that January 1, your time for COVID didn't start over. So it's from the beginning of COVID, it has been, you get the 2 weeks. Maybe you had to use all 2 weeks at once. Maybe you only had to use 3 or 4 days. Maybe you used vacation instead of COVID first. I don't know, but you only get, it's limited. You get a max, and it is not starting over, which means if you've used all 80 hours and you end up quarantined again, or you end up sick again, the company does not need to pay you. You can use your PTO. So you can use this year's vacation and sick time, but the company is not required to pay you, and the company won't get a credit for that. So a lot of people used up the credit that was available, or the time that was available for staying home with their kids because of summer. So there was 12 weeks of the Family First Corona Related Act, the FFCRA. There were 12 weeks of that at 2/3 pay, and um, most people maxed that out. But if you didn't for some reason, then that's still available as well, but it's voluntary. It is voluntary. So you need to check with the employer. And if you are the employer, you need to communicate to your team that, hey, we are going to pay this or we aren't. And it cannot be, I'm going to pay you for it, but not you, unless this person has run out of time. So you cannot pick and choose. That's my opinion. I don't know that I've seen any guidance on that, but I would definitely tell you that you can't say, oh, well, me, I am, I'm going to pay myself, but you're an employee and I'm not going to pay you for that. It's all the same. So if you do pay, if you use the COVID pay, you get the credit for it. It isn't costing you anything. It is costing you the time it takes to do the paperwork. But beyond that, just to know it's voluntary. So nobody can come to you and say, you have to pay this to me. But you do need to make a call as a company if you're going to continue to pay that through March 31st. After March 31st, right now, as it stands, that credit is gone. You're not getting, the employer doesn't get to just essentially take that off of their payroll taxes. So another thing that's still out there and is going to come into play again, but I'm not going to talk about that today, is the employee retention credit. It was very complicated last year. It is still very complicated. So if that is something that you think you may or may not apply to you, and now that a lot of people have run out of their PPP money and aren't renewing it, then reach out, ask the questions, and as questions come in about it, I will address it. But so far, it's kind of flown under the radar. Another piece of the legislation that has come out is there's a shuttered venue grant, essentially, that the SBA is doing. And this is to help all of those entertainment venues, some sports venues, anybody that was in a position where they couldn't be open. So this is your movie theaters. This is anybody that was in any type of production. So your stage theaters, your music venues, your orchestras, all these places. And it also rolls down to some people who are in the industry, like talent reps, people who specifically couldn't work. And so what this grant is it's going to give you 45% of your 2019 gross receipts, assuming you had a drop in revenue during 2020 due to COVID. And it's going to roll out, and it's going to roll out in waves of, if you had a drop of 90% or more, you're in the first wave. If you had a drop of 70% or more, you're in the next wave, and 25% or more, you're in the third wave, and so on until the funds are used up. So this is a huge amount more than the PPP. So if you qualify for this, you're going to want to hold off on getting a second draw of PPP and go this route, because it's a grant. It is essentially, you can use it to pay your wages, you can use it to pay your rent, you can use it to pay your subcontractors, you can use it to pay a lot more things, and it's a lot more money. And there, so far, I have not seen the window of time that you need to use up those funds. So if you think you're in that industry category, then you're looking at holding off on a second draw of PPP and seeing if you qualify for the shuttered venue credit. And like I said, it's not just, in St. Louis, we have the Fox Theater, we have, Powell Hall, those types of places. It could be sports venues. It could be, like I said, talent representatives, people who put talent on shows and commercials, and and I have some clients that do that type of thing. If those industries were completely shut down for a long time. I mean, there was no photo shoots, there was no filming, there was no nothing. So that came with at the end of 2020 as well. What else? Okay, so on to an individual side. So we more stimulus money was sent out. It was sent out the very first week of January. I don't know that too many people would have gotten it before then. And it was for $600 per person in your household. And I believe that included children under 17. So, or 17 and younger, something to that effect. So those already came out. That was where the bill was being held up because President Trump wanted 2,000 and the Congress only had 600 in there. Well, the 600 is what passed, 600 per person. And now there is some legislation that's pending with lots and lots of things in it that includes more. And it includes, guess what? $1,400. So that would have gotten it up to 2,000, but the politics of it and this is just how it's going to work. So there may be more stimulus money still coming in the next, I would say, I would just put it at the next quarter. There's so much wrapped into the current legislation that it's going to take a while for them to sort it out, including things like increasing federal minimum wage. And, there are lots and lots of pieces to it. Excuse me. So in regards to that stimulus money, because there's some that went out last April, May, and people were getting $1,200 per person plus $500 for each kid under 17 or under, that type of thing. It's tax time, and people are wanting to get their tax returns. And we knew this day was coming, that the tax preparers are the ones who are going to need to reconcile this. And so I have not found anything on the IRS website or any paperwork that is essentially being sent out or has been sent out yet that says, this is how much you got. But your tax preparer is going to need to know that. So if you are turning in tax documents, make a note how much you received and what date. Just how much you received and what date. That's all they need. And I would say go ahead, if you received some in January of 2021, list that too. How much did you get and when? Because it's all going to come into play when your tax return needs to get done. And I already have a vision of spending a lot of time sending emails saying, hey, how much did you get in stimulus money? Because some people got nothing. Some people got the max that they could get, which I believe was going to be $3,400, $1,200 per spouse, taxpayer spouse, and then you were up to 2 children. So you get $3,400. Some people got something in between because they were phased out due to income levels. So we need to know the number, and we need to know when you got it, because we're going to true all that up when we file the 2020 tax return. If you got too much, you don't have to pay it back. If you didn't get enough, it will be reflected on your tax return. So that becomes a very important piece of information. So make sure you're including it with any tax documents as you're getting your taxes prepared. The other piece of the legislation that affects individuals is the pandemic unemployment assistance. That is part of unemployment, and it was passed to have an additional $300 a week from December 26th, I think, December 26th through March 14th. There's an additional $300 a week for those people who are qualifying for unemployment. And I believe you have to qualify for a certain level of unemployment, just like the second round of PUA did. So originally, when we were getting an extra $600 a week, you could have a very minimal amount of unemployment that you actually qualified for. And then when the next round came, you could get the 300 as long as you qualified for at least a minimum amount of unemployment based on your past employment, such as, I think it was $100. So I believe that limit is still in place. Missouri, which is where we is already, sending that out. People who qualify. There was another piece of the legislation relating to self-employed individuals. They're called multi-earners or something to that effect. And I could not find on Missouri's site on whether or not that has kicked in. That's elective. The state does not have to do that. And it was another $100 per week for some self-employed people. So there's still a lot of questions out there relating to unemployment. And Should I continue to be on unemployment? Should I get the second round of PPP? How does that affect unemployment? And the answer really is if you've got PPP and you're self-employed, then you're not collecting unemployment. Um, that's not how that works. So your PPP is to replace payroll. It's a payroll protection program. And so it is designed to cover 2.5 months of your average payroll. And so until that is used up, you shouldn't be applying for unemployment. And my suggestion to you would be that, you don't put it all in your personal account and say, oh, I got it all paid this week. Next week, I'm going back on unemployment. It's not how that's supposed to work. So be very, very careful with that. As forgiveness applications are getting approved, as new loans are coming out, and as more and more filings are happening as far as 1040s are getting filed and unemployment forms for the quarter are getting filed, there's going to be more reconciliation happening. And you don't want to be in that bucket of having somebody come back and say, hey, you owe us unemployment back. You don't ever want to be in that situation. So be super careful. Make sure you're covering all of your bases before you are hopping on that unemployment roll. Make sure you're understanding how money coming into your business as revenue impacts your unemployment. So just saying, hey, I get this extra $300 a week, I want it, does not mean you qualify for it. So please just be very cognizant of that, because unemployment will eventually catch up and they will come back and say, this is what we calculated you were entitled to based on what was reported, and this is what you filed. And this is what you got, and we want some money back. So, okay, that's my soapbox on that. So just be careful. And I'll say that regarding any of this money, whether you're, in the situation that you're going to apply for another PPP, use your own internal moral compass on whether or not you feel like you really need this. Is this something that you qualify for, but you don't feel like you need it? Or is this something that you qualify for and it's going to save your business? Those are, and there's levels in between, but definitely keep that in mind. Use your own moral compass. On unemployment, the rules they're pretty clear. So don't go fishing around in that gray area trying to get this additional pandemic unemployment assistance, thinking that it's not going to catch up with you if you don't really qualify for it. On that note, relating to individual tax returns and unemployment, there is a 1099-G that you should get from your state. And if you have an account with unemployment, you received unemployment during the year, log into the account, print it out, give it to your tax preparer. That's going to show how much you got and any withholding that you had on it. So that is a piece of information that you might not have ever had in a year before. For a lot of people, this was the first time they were ever on unemployment. So they're not sure what that documentation looks like, but that is the form that the tax preparers need. 1099-G, in Missouri's case, it's coming from the Division of Employment Services, and it looks like a letter in Missouri's case. Some of them will look like a form with a box, but just be aware that that is coming, and don't turn in your tax information to be prepared until you have it, because we'll ask for it. And we don't know. So as tax preparers, we don't know unless you tell us that you filed for unemployment. We don't know. So, and that's the case with most things that are happening in your world. We don't know things like if you had a baby unless you tell us, unless we know you closely. We don't know if you got married. We don't know if you moved. So just give us more information rather than less when it comes to what's going on in your world. I always say, your tax preparer actually knows a lot of things about you, a lot more personal things about you than people would think, because we know if you got married, we know if you got divorced, we know if you moved, we know if you have kids, we know it all, So, but make sure you include all of that information as you're getting your tax returns, your tax information ready to go to a tax preparer, that you include your stimulus money. You may not receive a form on that, and include any 1099-Gs that you received from unemployment. Okay. All right. Goodness. Okay. I was hoping I could keep it at 35 minutes or less, and here we are at 36. So if anybody has any questions, feel free to drop it in the comments. I will get back to all of those comments. Yeah, as soon as I can. And again, if you have any questions on the employee retention credit, drop those in here. And as I get those, I will address them. And then as the new legislation rolls out, so we're not done. I think I started coming live and trying to come on here about legislative issues last spring, and we're not done. There's going to be some more. One, pandemic's not over, and two, we just had a change in our top office, and so there's going to be some changes coming. There's going to be legislation that's going to come down, and taxes are going to go up, which means to do that, legislation is going to be released. So I'm going to keep everybody as up to date as I can. Please feel free to, like I said, drop any questions here, and I'll get them answered as soon as I can.